Hello everyone, today is Friday, May 26th, and this is your USA Gold Weekly Review and Outlook. It's been a couple weeks since we visited with you. We released an important video about a week and a half ago on the death of brick and mortar retail, which if you haven't caught that yet, we will put a link up so that you can revisit that. An excellent video. Rather long though, so frankly we need a little bit of a break, but here we are again. And it's been a couple of great weeks for gold actually. You know, we saw kind of a bottom there around 1220. We've seen some strength ever since then, and actually for the first time in a long time, the technical picture for gold across multiple metrics looks really good. So Pete, jump in there.
Yeah, so kind of above the primary moving average complex, you know, the 2050, 100 and 200-day moving average, we saw the golden cross, as they call it,
exactly.
The crossover, the 50-day moving average above the 200-day moving average, which is typically viewed as being very indicative of the longer-term trend.
Right.
So that's encouraging.
Yeah, it's based on a notion of reversal, right? Because if the 50 days above the 200-day, it's basically even if you have a declining 200-day moving average, if the 50-day rises above it, it is this notion that the market is turned around, right?
Well, right, and you know, you can view that in a couple of different lights in terms of time frame and so forth, but overall typically viewed as a favorable technical indication. Held a trend line, broke kind of some important resistance levels, basically trading at about 4-week highs right now.
And what's interesting about that too is that this morning, you know, the GDP numbers for the first two quarters were released or revised, excuse me, and both revised higher. And so you actually had an improvement to the GDP numbers, which in years past or in times past would have really been largely viewed as net negative gold, yet gold is up, you know, $12 today and looking great, and silver the same.
Right, yeah, so rather than 0.7% in the first quarter, they're now saying growth was 1.2% annualized. So better than expected, and I think it really kind of sets the stage for the June rate hike, and gold largely ignored it, which, as you said, I think is encouraging. And so we also saw industrial production beat expectations as well. So that's, you know, is another piece of encouraging news that probably gives the Fed some level of comfort with regards to a June rate hike. It was largely baked in the cake anyways. Probability's been running north of 80% for a while. So
and even after the minutes release earlier in the week, you know, gold kind of, it just held water, but then went up as well, you know, shortly thereafter. And so
you know, the Fed kind of equivocated a little bit in May, which you know was I think interesting, but it didn't really phase the market that much.
Exactly.
Because even if the growth remained soft and inflation the inflation prospects have weakened, people seem convinced that the Fed's going to do that rate hike anyway.
Right.
So,
but I think, you know, a big takeaway for me is I really see that gold is starting to almost, just have a whole different narrative on this interest rate hike deal. And, you know, not that Jim Cramer, love him or hate him, people have varying strong opinions of him, but I was reading an article, and he's bullish on gold. He was talking about the Golden Cross, but one of the points that he made in his analysis that I thought was interesting is, you know, he talked about the technical side of gold and that there's been a series of higher lows and a series of higher highs, and it's channeling nicely, and gold as a whole is you know, shown this really positive outlook. But what he also added was that gold, each time the interest rate hike has come, has risen. So next time we raise rates again, it's likely to rise again. He was saying that was the fuel of gold going to 1,300. So he had the channel, the Golden Cross, all these positives, but he basically said the final catalyst was going to be the actual interest rate hike. And what a difference that is from a few years ago, when every single time there was even a sniff of an interest rate hike, it was so unbelievably bearish for gold.
Yeah, certainly CNBC is notorious, as are, you know, all the major news outlets, in saying that higher interest rates, lower gold.
Yeah,
no question about it. But you know,
yeah.
Anybody who looks back at the charts will see that higher interest rates frequently means higher gold.
Yeah, because it's been a you know, sell the rumor, buy the fact situation with gold. But you know, that seems to maybe be releasing in the market, and that's what we've seen here in the lead up. And we'll see as we actually lead up into the interest rate hike here, and we get imminently close how gold behaves. But like you said, it's pretty much baked in the cake. It's pretty much a given, yet gold has marched higher. And so this is very promising for gold if gold has taken a new narrative towards interest rate hikes, as that has represented the overhang for the gold price for several years now.
Right.
So we'll go from there. But macroeconomically, wanted to make a quick point about China, Pete. That I thought was
Yeah.
interesting.
So did a little bit of research on China supply and demand. There was a report that came out recently that Chinese gold output had dropped about 9% in the first quarter, and it was associated with this move within China to consolidate and modernize their mining industry. So there's this expectation as they phase out these lower producing mines, they kind of plan on closing about 150 mines over the next several years, that there's going to be a drop in production. But demand remains robust. So over that same period, in the first quarter, there was about a 14% increase in demand. And so they sort of bridged the gap there with regards to supply by reaching out to global markets.
Right.
So there was almost a 65% increase in gold imports into China in the first quarter. And so, again, I think as China has to reach out to the global markets for additional supply to meet the demand, I think that's a positive for the price of gold as well.
Well, not only that, it's physical.
Physical.
They don't want more paper. Go buy all the paper they want. This is actual physical imports.
Got all the paper they need in
But
the
yeah,
West here.
Exactly, and so the demand is there. The physical
Yeah.
demand is there, and you're right. If there's a gap between what they're producing, or they're, like you said, they're closing lower and or smaller and underproducing assets, if you will, and so the need is to fill the gap, and so it makes a lot of sense. It is a very compelling long-term narrative.
Yep.
Which brings us to our final conversation point here. How could we not talk about Bitcoin? Holy Toledo, Bitcoin. Woo! It is, cruising. Well over doubled in a month. Close to almost tripled. I mean, it's pretty insane. It definitely has anything from people saying, oh, it's a bubble without a doubt, to people saying it could go to 25,000. I even saw somebody write an article saying Bitcoin could go to 1 million. Wow.
What is it?
Yeah, well, the price of Bitcoin or what is a Bitcoin itself? No, this is great. Yeah.
Completely grasp
No.
how it's necessarily any better, other than it's the fixed number of coins
and
over time.
I will tell you this: the volatility is going to hurt it in time, because even if you're an acceptor of Bitcoin, I could tell you if I sold gold for Bitcoin yesterday, and Bitcoin's down 11% today, I would not be a happy camper.
Yeah.
So how do you hedge? How do you slough off hedge risk in owning Bitcoin? The volatility is astronomical. So in actual transactable business, I don't get it. So this does have a speculative mania component to it, without a doubt. Where it goes from here, I mean, there's no doubt about the fact that it could go higher. I mean, it's got a crazy head of steam, but without very many people knowing what it is, without being able to identify the true commerce role of Bitcoin, we are talking about an asset that has limited liquidity, huge spreads.
And arguably, as if it does become increasingly popular as a means of commerce, it's only going to draw more attention of the policymakers, the central banks,
exactly.
and governments, which
And
could completely derail it.
Well, a big part of this move has been, born from that, from what I understand, is that there is that attraction to the privacy of the Bitcoin.
Oh, yeah.
And that's what's driven what's going on here. But, nevertheless, there was a great article in Market Watch, and it's going to be our golden gong today. I think it really put into some context just what is happening with Bitcoin in a broader market sense. I want to share with you this. It's from a contributor named Matthew Lin. Posted this to Market Watch. He said, Bitcoins themselves may be very new, yet that kind of price action is very old. In truth, it is starting to look like a bubble, and that should be making investors everywhere feel nervous. Why? Because it tells us that financial crazes are back, because it will lead to overinvestment and wild speculation, and because bubbles inevitably crash. And once that happens, the losses can ripple out in unexpected ways. In any long bull market, there are always one or two assets where the price goes completely crazy. It might be dot-com stocks or space exploration companies or apartments in central London or hedge fund managers, or if you go back far enough, radio shares or South American railway companies. But it is always something. If there is an asset bubble underway, it surely tells us that we are close to the peak of a bull market. And sooner or later, that will turn down. Which I think, in some broader context is a great message. It'll be interesting to see what Bitcoin does from here. We'll definitely be keeping an eye on it, continue to cover it. How could we not? But we will leave you with that. We hope everybody has a great Memorial Day weekend. To Matthew Lynn, the Golden Gong. Thank you very much for watching. I'm Jonathan Casares.
I'm Peter Grant.
See you next week.